Hi, welcome to the Market Alert for Monday, the 5th of December 2022. So stocks, bonds and crypto and commodities soar as dovish Powell trumps the hawkish payrolls. It was, as it says here, well, that was easy. Yeah, just make a comment after they've been released and the job is sorted. Market is brought back. Bonds and stocks slammed after payroll sparks a hawkish surge in rate hike expectations as the market wanted to see and keep the pause pivot dream alive, which it managed to do by the end of the session. Markets whipsaw after hot jobs and wages report, and here are the numbers. It was forecast at 200. The previous was 261. As I said, to keep an eye on this as they readjust them after. It came out at 263, which is 63,000 more, but look what they did. The previous was then adjusted to bring it in line, so it only looks like there is a 20,000 difference. So that's how it's worked, or 21,000 difference. That's how it works. So then the market was able to rally and move back to the upside. This week's economic data isn't a lot. We've got Lagarde out today and ISM PMI. There is nothing for Tuesday and Wednesday. On Thursday, we'll then see European news. It's an Italian bank holiday. So Lagarde speaking again. We've got unemployment for Thursday. And then Friday, we've got core PPI month on month and prelim. So no central bankers this week apart from Lagarde speaking today and on Thursday. So a quiet week news-wise. We know what happens when we have no news. And gold-silver ratio continuing to move down as silver moved higher during Friday as well after an initial sell-off from the non-farm numbers, but then the market was brought back. So let's have a look at the market's reaction to Friday's numbers and what happened following this and overnight. So in the US Wall Street, Dow 30, you can see the market trading down sharply on Friday, only to move back to the upside, and overnight prices remaining above the 5-bar moving average. To look at this in more detail, let's have a look at the 30-minute chart. Here you can see the market moving lower. I went down 100, 200, 300, 400 points, and then the market stopped. We see the selling disappeared, the volume turned to green, crossover on the stochastics, and the market moved all the way back, and then plus some for the Dow. Overnight, the market is in a range. There is no news to give a direction to this market, so it's going to have to find its own direction during today. The most important thing, I suppose, is to stay above Friday's close and go towards the high if possible. If prices fail to do this, then the support on the downside is going to be the DP and the buying that we see over to the left there. So that's the sort of range for the Dow and what to expect. But at the moment, the market's stuck in a sideways range, so the direction is going to be determined by the traders, and I have no idea which direction this market is likely to go, except to say there is no news around to sell the market off at this point. But of course, you have to trade what you see in the charts at the time, of course. In the German DAX, we remain in a sideways range. The DAX down with the news on Friday, but then rallying all the way back up, just as the Dow did overnight. The same as the Dow as well. The market is currently above the 5-bar moving average, but we are stuck in this range at the moment. So let's have a look at the 30-minute chart. The 30-minute chart, you can see that the market was up initially, as we spoke of, up 100 points before the news was released. And then you'd have to get out of the market before the news. There's no doubts about that. I spoke about the market moving up on Friday. If you've got profits, you've either got to lock them in or get out when you've got non-farm payrolls. This is massive. The same as the the FOMC meeting minutes as well. They're the two biggest, obviously, both the drivers of the interest rate rising cycle at the moment. So you don't want to be in when this news comes out. For this reason, and you can see there the market dropping, but coming straight back within 30 minutes off the lows with buying, and then moving the market back up to where it was. This is classic in a market that's moving higher as well. They'll use the news to shake out people, get them out of the market, and then bring it back. And you can see that even within the first 30 minutes, they brought the market back above the 200 MA, and that was used as a support. Overnight, prices sideways, struggling with the close of Friday, but we're down at the 50 EMA, and we've got the DP there. As I've said before, we don't have any economic news today apart from Lagarde. Nothing major this week. What time is Lagarde out? Just to refresh my memory there. She's going to be speaking at 1:45 a.m, which means that she's already spoken, if that is correct. Let me just refresh this, make sure that is the correct time. Yep, so she's already spoken anyway, so there's only the US ISM numbers later this afternoon. So the market will have to find its direction based upon what the trader sentiment is. We've got the 200 below the DP if the market moves to the downside. Both these areas are support, as we can see from Friday. And on the upside, we've got resistance at the close and, of course, Friday's high, which was put in just before the release of the NFP numbers. In the 5-minute chart, overnight, you can see prices are sideways. We had a bit of a gap down there that the market's come back and filled. And on Friday, like I say, we had a nice move to the upside in the morning session. We were sideways to kick off at 8:15, and then the market broke out and then traded up, as you can see there, 100 points until the numbers came out, and we see the market drop nearly to, well, it is 200 points because you've got the BRN there and this one here. Then we've gone through a good 30 points there as well. So just over 200 points. The market finds support. It's oversold, crossover, and then the market is brought back in the afternoon. And that's how it was throughout the evening. But overnight, you can see the market's sideways there at the time of recording. Trades for the week, we've got 62793, 6.49 on the profit factor, and the win-loss is 58, 42-ish, around that sort of number. Like I say, I'm not really bothered about that sort of ratio. It's about, at the end of the day, making the profits. I'm not worried about how many losing trades that I have. As long as they're small and I let the trades run, then it's fine. And there you can see I lost a few on the morning, then got in, made some money, and then out before the news, and then the market taking advantage thereafter. In the S&P, market down sharply below the 205 MA, still at the 89 to this major swing over to the left there, still struggling at this level. Market back though on Friday after the news, and overnight, again, the same as the rest. Market struggling a bit. You can see how it gapped down on Friday to the 200 MA, and then the market saw the buying coming back in and moved it back to exactly where it was before the news. Part of the readjustment, and of course Powell's comments remaining dovish, brought the market back. So stuck in this sideways range, same as before. We've got the DP on the support side, got the high on the upside that the market will need to take out. In the FTSE 100, still sideways to higher. Market currently just below the 5-bar moving average, but in the 30-minute chart, again, you see the shakeout Friday. We had one earlier on with UK news, then the non-farm payroll numbers. The market brought back above the 200 again as well, same pattern, and then stuck in a range back to the DP, actually taking out the high that we'd had in the morning following the NFP numbers there. Markets moved higher off the DP and traded up quite nicely to where the selling came in on Friday evening, but otherwise sitting on the close at the moment. Again, the same, the DP offers support on the downside. On the upside, to move higher, you've got to take out the high. In the currencies, we'll start off with the GBP, JPY, the market finding support at 78 on Friday with the news. This was brought off the lows, and overnight you can see the market's already moved up quite nicely back to the 5-bar moving average. In the 30-minute chart, we sold off initially, then with the news. So we see how the market moved to the upside, straight up to the DP in the 200 MA before finding some resistance, trading back below the close, and then coming back down and finding support at the BRN at 165. Market sideways, so there's your DP and close way above this. We've traded up to the high on the overnight in the Asian market. I managed to get through the 200 MA as well. We've got a bit of selling around at the moment, and the momentum is starting to drop off, so we could see a bit of a pullback before the market finds a bit more support. Meanwhile, in the pound, continuing to power ahead through the 200 MA there on Thursday, Friday, continuing this as the dollar moved lower following the NFP numbers. And there you can see we had a shakeout first though of 100 points, then the market coming back. And overnight, again in Asia, the market taking out Friday's high, which you can see there, and moving up around 50 points before finding some resistance at the R1, where at the moment the market is having a bit of a pullback. You'll want to see support either at the 20 bar moving average, the high, and this BRN here at 123 will be very important for the pound. So this area here is likely to lend some support unless the dollar has a bit of a dead cat bounce. And speaking of the dollar, let's go and have a look at this now. So in the dollar on Friday, this lower, as can be seen there, as Powell's comments were dovish, that sent the dollar lower. And overnight also the dollar index is just slightly lower there, down to the S1 as we look inside the detail. There was the initial news, the hawkishness that rates would have to continue to increase at 0.75% to 1%, but that was soon discounted, and following this the dollar has moved lower. And there you can see as well, straight through Friday's low, and sitting at the S1 like we just said. So this market needs to get back above the 20 bar moving average and the low and close, and in its way is going to find a BRN and the 50 EMA in any bounce that it does actually put in during today. The metals have taken advantage of this, with silver actually trading above 23.50, but overnight you can see there the market showing a bit of weakness coming off the overnight high. So let's look at this in the 30-minute chart and see what is going on. Let's just go back to Friday, because you've got the quick spring to the downside for the silver market, shake out the longs just as you saw in the stock markets, and then the market moving back to the high of Friday. And you can see there that we've got a bit of selling coming into the market there. Although we've become oversold now, we need to get back above the high of Friday, which looks around 23.22, somewhere in that region. A bit of buying coming in there, but we'll just have to wait and see. Again, the market's going to make its own direction today. There's no news to move the market. And in the gold market, also moving to the upside above the 200 MA, above $1,800 an ounce. Bit more detail there. We had a bit of a shakeout there, take out the weak longs, and those that were in the market on an intraday basis, take out the stops, and then bring the market all the way back and above Friday's high at the moment. So it's going to be important that we try and hold these levels at the moment. So a bit of a follow through in the metals markets to the upside on the overnight markets there. So like I say, we've got a quiet economic news week as we head into December. The December rally has continued so far despite the higher than expected non-farm payroll numbers on Friday. It is no surprise. It is also no surprise that they use these numbers to actually shake out those who remain in the markets during economic news items, to shake them out. They will use that news, take out the stops, buy in at lower, and bring the market back. So as I've said before, you don't want to be in the markets, and any seasoned trader will tell you, you never want to be in the markets with the NFP numbers or the CPI numbers or the FOMC numbers, because you just don't know which way the market's going to move, particularly with the high frequency trading. And not only that now, but it's not just high frequency anymore. These algorithms now take into account the news, the merest bit of news as well, to move the market sharply in one direction or the other. Okay, that's it for this one. Let's see what happens during today. And as ever, thanks for watching. See you in the next one.